Hello, today is Sunday, May 31st, 2026. Here is your daily signal. Ukraine's evolving mid-range drone capabilities are reshaping the battlefield and putting Russia's rear areas at new risk, according to recent coverage from Business Insider. The broader Russia-Ukraine conflict, which escalated in February 2022 after Russia's full-scale invasion, has seen both sides rapidly expand and adapt drone technology for both reconnaissance and strike operations, forcing new battlefield tactics and defensive strategies. On May 30, 2026, a major Russian drone strike targeted Ukrainian energy infrastructure, causing widespread outages in Kharkiv and Kiev, while Ukrainian forces reported shooting down 18 out of 20 Russian-shot drones over Dnipropetrovsk and Zaporizhia. Russian Defense Minister Andrei Belousov also announced plans to triple domestic drone production by year's end. In the near term, more aggressive drone attacks threaten to increase disruptions to Ukrainian civil infrastructure, while Russia's manufacturing ramp-up could shift the edge in aerial operations by late 2026. Both militaries' deepening reliance on drones is expected to accelerate development of electronic warfare and anti-drone defenses, possibly pressuring global suppliers and spurring new regulations on drone exports. As the Iran war winds down, new market opportunities and major headaches are emerging in sectors ranging from tech to finance, with Business Insider noting Barclays sees a potential short squeeze in consumer stocks once a peace deal is finalized. The Iran conflict triggered disruptions across global commodity, technology, and financial markets this year, with the closure of the Strait of Hormuz, through which about 20% of world oil and LNG trade moves, delivering supply shocks and logistical headaches, particularly for the tech sector. Technology leaders like TSMC, Nvidia's principal chip partner, have flagged rising costs and supply threats linked to Middle East instability, according to CNBC coverage of their April earnings. Following the announcement of a ceasefire, relief rallies boosted energy sector stocks and sent oil prices sliding. Although volatility remains high, the Strait of Hormuz bottleneck alone has caused a more than 15% drop in global exports of crude oil, LNG, and fertilizers. In the coming months, persistently high energy and shipping costs could eat into manufacturing and tech sector margins, even as inflation and market swings linger. Major Wall Street banks and I-sector firms are among the immediate beneficiaries, but forecasters warned that ongoing uncertainty risks damping investor enthusiasm for blockbuster IPOs like SpaceX, especially if commodity and equity volatility persists. Concerns over quantum computing's potential to upend cryptocurrency security are in sharper focus this week, with new scientists reporting that Q-Day could render Bitcoin's core protections obsolete almost overnight. Quantum computing, fundamentally different from classical machines, processes information at exponentially faster speeds with Shor's algorithm, introduced in 1994, proving that quantum systems can rapidly unravel the cryptographic foundations of most cryptocurrencies. The United States National Institute of Standards and Technology has led efforts since 2016 to standardize post-quantum algorithms, anticipating threats to the blockchain. Major players include hardware leaders like Google and IBM, crypto voices like Ethereum co-founder Vitalik Buterin, and exchanges such as Coinbase and Binance, all preparing to face quantum attacks. Within the next few years, cryptocurrencies will need to switch to quantum-resistant technology to remain secure, or risk catastrophic theft and disruption. Failure to upgrade could provoke market chaos and widespread loss of confidence, so the pace of cryptographic innovation and education will be crucial for asset stability in the quantum era. Now, onto the markets. International markets showed mixed performance, with Italy and Spain posting the strongest day-over-day gains as EWI and EWP rose 0.20% and 0.24% respectively. Germany's EWG edged lower by 0.14%, while Netherlands saw robust momentum with a monthly jump for EWN of 9.5%. Commodities were led by gold, with GLD up 1.05% day-over-day, driven by broad demand, while U.S. oil USO retreated more than 1.2% on renewed supply concerns. Natural gas, represented by UNG, posted the best monthly move at 17.5%, while uranium URA was little changed day-over-day. In sector performance, the S&P 500 advanced nearly 0.25% on strong gains for Microsoft, while real estate XLRE and healthcare Roman 45 each saw slight declines of nearly 1% day-over-day. Semiconductors stocks were mostly flat but up over 26% for the month, supported by momentum in ARM and MU. Among favorites, Oracle surged more than 10% day over day as the top gainer, while Intel dropped over 5%, making it the largest loser in the group. That's it for today. You can find more news and details on our website. Goodbye.